General expense 5,200, salaries 12,000, rent and taxes 5,900, debtors 31,000, bank 10,900. Credit side is capital 24,000, B's capital 12,000, C's capital 5,000 including goodwill. Sales 1,80,000, creditors 13,500. Total of the both the side 2,34,500. Adjustments A and B were partners sharing profits and losses equally. Number two, Mr. C was admitted to partnership on 1st July 2017. On 31st December 2017, stock was valued at rupees 23,500. Rent and taxes paid in advance rupees 900. General expenses were outstanding rupees 800. Charge depreciation on furniture at the rate 10% per annum. Share of goodwill of new partner was valued at rupees 1000 on 1st July 2017 and it to be adjusted. You are required to prepare trading profit and loss account for the year ended 31st March to 31st December 2017 and balance sheet as on that date. Now, if you see that in our problem, the calendar year is a year end, and they are provided information about the uh, three partners. Partners are A, B, and C. Now, if you see that in this particular problem, A, B profit sharing ratio they are provided equally, and they says that from 1st July onwards they admitted Mr. C is a second adjustment. It means the in between the calendar year new partner is admitted. So we are going to learn what kinds of treatments we have to do for admission. Okay, fine. These things you have to keep in mind. We have to consider about the treatment regarding the admission of partner, new partner C. And there are provided various kinds of information. Now, before preparing this, what we have to do? Now, one thing you have to keep in mind, we will prepare trading account, profit and loss account, partners capital account, and balance sheet. Trading account, profit and loss account, partners capital account, and balance sheet. These four accounts, these particular four things we have to prepare and we have to finalize. And one thing you have to keep in mind, we will prepare profit and loss account before admission and after admission. We will prepare our profit and loss account before admission and after admission. How we will prepare that we are going to learn. Now, friends, uh, I will show you the how to prepare this accounts. Yes, am I audible?
Yes, sir.
Okay.
Yes,
Yes,
sir.
sir.
Yes,
Okay.
sir.
Now, how we will prepare our partnership final account that we are going to learn. Now, see that what kinds of accounts we have to prepare. Now, this is a problem number 13 solution. In the books of the form trading account we will prepare 31st December. It is a December is there. It is not a March end, December. And we required around 5 lines. Then profit and loss account we will prepare. It is very important to prepare. Now here we divided this particular profit and loss account in debit side rupees and credit side and rupees is there. It is also 30 year end is 31st December. Now friends, if you see that we divided two terms, January to June. This is the first term. It is a, we can say that before admission, and July to December, it's a after admission. Means the C has admitted on 1st July. C has admitted on 1st July. So from July to December, what kinds of expenses are created, that we have to show separately. And January to June, in this particular period, C was not there, only A and B was there. B, A and B were there, and therefore we have to consider January to June, this 6 months, and July to December, this 6 months, means after admission and before admission. This particular profit and loss account we will prepare. Then after that, friends, we will prepare partners capital account. There are three partners, A, B, and C. These are debit side and credit side, A, B, C. Balance sheet we will prepare. It is also 31st December 2017. It is a normal balance sheet that we are going to prepare. These things you have to keep in mind, how we will prepare our books of records, how we will prepare our final account. Now, friends, we are going to learn various kinds of items which are held in our problem. Now, friends, first item is there in debit side, is there drawing. Drawing is a personal expenses, and A is drawing 15,000, B is drawing 7,500, and C is drawing 1,500. Drawing we have to show partners capital account. Drawing we have to show partners capital account debit side. We will write to drawing, and we have to show A is drawing 15,000, B is drawing 7,500, and C is drawing 1,500. I hope you understood. Whenever the drawing we have to show, so we have to show our drawing partners capital account if it is there in the trial balance. After drawing, if you see that the next item is there furniture. Furniture 10,500 is there. The furniture where we have to put the furniture 10,500, and if you see the 6 number adjustment, charge depreciation on furniture at the rate 10% per annum. The furniture is a fixed asset. The furniture we will record it in our balance sheet. Balance sheet asset side. It is a fixed asset. So we will write furniture, and we will put value inner column 10,500. Now, this adjustment they are provided depreciation. So we will deduct it the depreciation value, as you know that depreciation, and what how much amount of depreciation they are provided. This is that 10%. 10% we have to charge depreciation. So how we will charge the depreciation? So
1050,
10% means how much will come?
1050.
1,550, 500, 500.
1050. 1050. This is a depreciation value we recorded. I hope you understood how we will write the depreciation. And depreciation we have to put less from our fixed asset, and rest of the value we will show outer column, that is 9450. 9450 we put outer column. Now depreciation we have to show in our profit and loss account debit side. to depreciation to depreciation on furniture. To depreciation on furniture. Now, friends, total value of depreciation is 1050. Now, this particular depreciation for entire year, this particular depreciation for entire year, we will divide it equally because January to June 6 months are there and July to December 6 months are there. So we will divide it this 1050 in equally.
125, 125.
So
Sorry, 525.
yes, 525,
25.
525. I hope you understood. It's very important. We will dividing this. Then after that, after recording this furniture, next is in our trial balance purchases 1,10,000. Purchases 1,10,000 we have to show in our trading account debit side. Purchases where we have to show trading account debit side. We will leave one line because opening stock always recorded on top. Purchases and value of purchases 1,10,000. We recorded purchases. After recording purchases, next item we have to see that in our trial balance, that is stock 25,000. Stock is 25,000. So it is a opening stock, and opening stock also recorded in our trading account debit side on top to opening stock value rupees 25,000. Yes, I hope you understood the how we will write our values. After recording opening stock, next item is there, that is general expenses 5,200. General expenses 5,200 and general expenses were outstanding 800. See the fifth number adjustment. General expenses were outstanding rupees 800 and general expenses they are provided profit and loss account 5,200. General expenses we have to put, where we have to put outstanding, we have to add it. Outstanding we have to add it. So 5,200 plus 800. So how much will come? So
6,000.
6,000. Right. The general expenses we have to write to general expenses. General expenses 5,200. We have to added 800. Total amount of general expenses 6,000. Now 6,000 we will divide it into two terms. Jan to June 3,000 and July to December 3,000. Yes, I hope you understood what is going on, what we have to record and how we will write. After recording general expenses, now general expenses outstanding 800, we have to show balance sheet. Balance sheet as liability side. We will write here outstanding general expenses is 800. Then after that, Next item in our trial balance, they are provided salaries rupees 12,000. Salaries rupees 12,000. And is there any adjustment? There is no any kind of adjustment. Salary directly we have to put profit and loss account debit side. Whenever we have to put the profit and loss account debit side, it is divided in particular two terms. So how we will divide it? Salaries. It is very simple to write the salary profit and loss account debit side to salaries, and this particular salary it is 12,000, 6,000 for first term and next 6,000 for next term. Okay, after recording salaries, next item is there in our problem. They are provided rent and taxes 5,900. Rent and taxes 5,900. And if you see the fourth number adjustment, they are provided rent and taxes paid in advance rupees 900. It means rent and taxes 5,900 and rent and taxes paid in advance 900. Advance payment, it is a prepaid, and prepaid value always deducted. Prepaid value always deducted. So 5,900 minus 900, it means actual rent and taxes are 5,000. Actual rent and taxes are 5,000. So prepaid, we will deduct it. So, so we have to write here to rent and taxes. Here actual was 5,900. We deducted rupees 900, rest of the value 5,000. Now this particular 5,000 we have to divide it into two terms. So 2,500 and 2,500. Now this prepaid value 900 we have to show balance sheet. We have to show balance sheet asset side, and we will write here prepaid rent value is 900. After recording this, it's very simple. Now next item is there, that is debtors 31,000. Debtors 31,000 and bank 10,900. Debtors and bank we have to show balance sheet asset side. Debtors and bank we have to show balance sheet asset side. So we will write here asset side debtors, and the value of debtors 31,000, and they are provided bank balance also, that is 10,900. So debtors and bank balance we recorded. After recording this, next is next they are provided is a debit side, it is over, debit side is over. Now come to the credit side. Capital balances they are provided. A is capital 24,000, then B is capital 12,000, C is capital 5,000. So capital balances we have to show partners capital account credit side, where we have to show partners capital account credit side. We will write here by balance brought down. A's capital 24,000, B's capital 12,000, and C's capital 5,000. See that how we will record it partners capital balances which was there in our trial balance. After recording the partners capital, next item is sales 1,80,000. The sales and creditors 13,500. Sales we have to show in our trading account credit side. Sales we have to show trading account credit side. So sales trading account credit side by sales, and the value of sale is 1,80,000, and they have mentioned the creditors 13,500. Creditors we have to record it balance sheet liability side. So we will record here creditors, and creditors value 13,500. See the friends, after recording these all items from the trial balance, is there any item remain? No, all items are recorded. Now next things, adjustment we have to say. A and B were partners sharing profits and losses equally. This particular information, therefore whatever expenses and profit are there, we will record it equally. C was admitted to partnership from 1st July 2017. This says that C was admitted, therefore we divided our profit and loss from 1st January to June and July to December. Then this says that on 31st December 2017, stock was valued at rupees 23,500. So it is a closing stock. The closing stock, whenever we have to record, and this particular closing stock, we have to give two effects. First effect, we have to show partners trading account credit side closing closing stock, and value of closing stock 23,500, and closing stock second effect we have to give profit and loss account, sorry, balance sheet asset side closing stock value rupees 23,500. After recording the closing stock, two effects. Now we have to consider further adjustment. Rent and taxes paid in advance we already recorded. General expenses outstanding already recorded. Charge depreciation also we recorded. Now 7 number adjustment is very important. What they are providing. Share of goodwill of new partner was valued at rupees 1,000 on 1st July 2017, and it to be adjusted. It to be adjusted means not adjusted, not provided, not provide the any kind of effect regarding the goodwill. Now new partner brought the goodwill. He has brought the goodwill. The goodwill he has brought. So what will be the effect? So partners capital account debit side, we have to show goodwill value to goodwill to goodwill, and six column 1,000. Now this goodwill of new partner, it is distributed among the old partners as per their profit sharing ratio. Goodwill of new partner distributed to old partners as per their profit sharing ratio. Here we will distribute the goodwill by goodwill, and it is this, how much amount is there? 1000. So 1000 distributed to A and B in their profit sharing ratio. And if you see the first adjustment, they says that profit sharing ratio is equal, so we will distribute it equally. So A's share 500 and B's share also 500. So I hope you understood. So goodwill brought by new partner, it is distributed among the A and B. So this particular value is deducted from the C's. There is no value for C, and therefore it is recorded debit side and also show credit side, and it is distributed among the two partners. I hope this particular effect you understood this. Then after that, if you see that, is there any kind of adjustment is remain, is there any kind of adjustment is there? I don't think any kind of adjustment is not there. Now what we have to do, now we have to close first our trading account, and we have to find out the gross profit. We have to find out the gross profit. Now close this credit side total, SUM, credit side total 2,03,500. And what about the debit side total? SUM 1,35,000. So what we have to do? 2,03,500 minus 1,35,000 is equal to 68,500. It is a gross. It is a gross profit. It is a gross profit carried down. Gross profit carried down. This particular gross profit we have to transfer to profit and loss account by gross profit brought down. Now gross profit also distributed equally. Gross profit also distributed equally. So 68,500 divided by 2 to 34,250. Here so 34,250. So see that we recorded profits, gross profit. Now we have to, what we have to do? We have to close this. Credit side total 34,250. Here so 34,250. Now what about the debit side total? What about the debit side total? SUM from Jan to June total is 12,025, and from July to December total is 12,025. Same total is there. There is no problem. Now what you have to do? From 34,250 minus 12,025. 34,250 minus 12,025. The rest of the value 22,225. 22,225. Okay, fine. Many are got the same answer. Now what we have to do now, January to June, these 6 months, A and B were partners, and from July to December, A, B and C, three partners were there. So this particular profit we will distribute it to A and B only, to net profit. A, we will equally distribute it to 11,112, and we can say to net profit for B. The total 11,112 and 11,112 for A and B only. Then after that, you have to find out the total of profit of July to December term. How we will find out? 34,250 minus 12,250. So you will get again same. Now we will distribute this net profit. Net profit. A will get how much? It's equally distributed. A will get 7,408. Then B also 7,408, and C 7,408. I hope you understood this A's, B's values. Okay, fine. And friends, then after that, it is transferred to partners capital account. It is transferred to partners capital account. Now what happened? We will discuss the same in next lecture, because our time is over and we cannot uh, do the same things in further. I cannot give the further. It is this particular profit we will transfer to partners capital account credit side. Partners capital account credit side. Then you have to close the partners capital account. Whatever balance will come, it is transferred to balance sheet liability side, and you have to tally. Now these things we have to do next lecture. Now